All right, good morning, guys. Welcome to another fun-filled edition of Mr. Warren's home video lessons. So, hopefully, you guys just finish up the do now. In your own words, describe and explain what a tax return is and why do some people get them. So, first off, slight typo on that. It should have been tax refund, not tax return. So, slight typo on my end. So, this is something that chances are you've heard about before, especially if you guys have jobs, if you have parents, and they talk about how, oh, tax season is right around the corner. This is, usually after in between January, February, March timeframe where people have to do their taxes. And so we're going to kind of discuss a little bit about what that is. And so hopefully you guys told me kind of what you guys already know. And hey, maybe if you had a guess as to why some people get those tax refunds or some people call them tax check or get their taxes back, it's usually talking about the same kind of thing. So basically, shorthand, tax return is essentially something you have to fill out every year to tell the government how much money you made. And so, once you tell them how much money you made, then that determines, hey, did you pay them enough money in taxes? Did you not pay enough? Did you pay them too much? And so what a tax refund is, the whole reason people get money back every year is because, oh, they overpaid. The amount of money that was taken out of each of their checks was a little too much. And so the government's basically sending them however much that overage was. So if I say I paid an extra $500 extra to the government, then they would send me a check for $500 because, oh, you paid too much. Or if you don't pay enough, instead of getting a check, you essentially get a bill from the IRS saying, hey, you still owe us this much money in taxes for the year. And so that's kind of what that is. So whatever you guys have, just make sure it's about 4 to 5 sentences, and we'll go ahead and get started for the day. So, a couple things we're going to discuss today. Like I said, we're going to kind of go a little bit deeper into what some of these terms mean. Like I said, if you guys have jobs, this is very applicable to you because you have to do this kind of stuff if you are working. And if you guys do not have jobs yet, I'm sure you guys are well on your way to getting them. So, first thing we're going to discuss, something known as withholdings. Withholdings, money that is taken out of your check or your pay. Oops, let's misspell that. Before you get it. As I said before, these are not the most technical definitions in the world, but at least for these purposes, trying to keep it as simple as possible. So, withholdings. The money taken out of your pay before essentially you receive your pay. And so, withholdings, that's when you look on your check stub, they'll say the total amount of money you make, and then they'll say, oh, then they took this much out for federal tax, they took this much out for state taxes, and so on and so forth. So all those items that say, hey, minus this much, those would be your withholdings. That's how much is taken out before, okay, either total amount, and at the bottom of it says, okay, here's how much money you have left after you paid all these taxes and whatnot. And so, like I said, just keep in mind withholdings, just the money or the amount, the increments that are taken out of your check, out of your paycheck before you guys see it. Next up, we have something known as, kind of we discussed before, but I'll give you more formal definitions so you write this down in your notes. We have tax return. A form that tells the government your income for the previous year. So, kind of like we were discussing before, we're going over the do now. Your tax return, when you file a tax return, once again, all this is telling is you're basically telling the government how much money you made. And so, if for whatever reason you have multiple jobs, kind of like I do, you're gonna have to put all these together. You have to tell them how much you made at this job, how much you made at this job, and then you have to tell them, okay, how much money was taken out in taxes. And so that's those forms you fill out. Some people do it electronically through like TurboTax, or they have somebody else do it like H&R Block. Lots of different ways to do it. It's kind of just kind of whatever your preference is. Next up, we have something known as taxable income. Any kind of gross income earned through wages, salaries, commissions, investments, and gained interest. All right, so kind of a lot to unpack with this one. So kind of just take it step by step, and I'll walk you guys through them. So taxable income, any gross income earned through wages, salaries, commissions, investments, and gained interest. So first off, wages. So wages is simply referring to if I have a job where I get paid hourly. You know, you make $7 an hour, $10 an hour, whatever it may be. So that's what wages are. And then you have salaries. So if you're not paid hourly, you might be paid something called salary, which basically says, hey, the job agrees to pay you this amount of money per year. Then that money is divided up amongst 52 weeks, or if you get paid twice a week, or two times a month, whatever it may be. So instead of earning dollars per hour, okay, I'm going to make the same amount pretty much every paycheck. So we have wages, salaries, and we have commissions. So some people work jobs that pays them not only hourly payment, or maybe not only a salary, but also commission. So if I say I work at Best Buy, my boss says, hey, I will give you $50 commission on every single big screen TV you sell. And so commission is just referring to that extra $50 you're making for, hey, it gives me incentive to be a good salesman. Then we have investments. So we've already talked about investments in the last unit. So any kind of money I make through stocks, I make through bonds, things like that, that would fall into this category as well. And then gained interest, kind of like we talked about in the previous unit when it comes to savings accounts or other accounts that gain interest over time. So once again, you would report that income to the IRS when you file your taxes. So last thing we're going to discuss, and I'm about out of room, so we're going to erase this top one. Last thing we're going to discuss are tax deductions. Tax deductions, simply money you can subtract from your gross income on your tax return. All right, so actually, let me step away for a second. Go ahead and pause this if you haven't gotten taxable income written down yet, and I'm going to erase this so we can move on. All right, so once more. Tax deductions, money that you can subtract from your gross income on your tax return. So what would be the point of this? What would be the point of trying to subtract dollars from that amount? So basically what this looks like is if I say, hey, I made $10,000. Last year I made $10,000 and say I have to pay 10% in taxes on that $10,000. So what's 10% of $10,000? Hopefully most of you guys got $1,000. So pretty simple, right? So I made $10,000 and they say I got to pay 10% in taxes. So that means I got to pay them $1,000 in taxes. So what tax deductions do is they lower this number up here. So if I made $10,000, but then I said, hey, I have $500 in tax deductions. This is what happens. So I have my $10,000 I made, and then I subtract $500, which ends up giving me a total of $9,500. So now, when I go to say, hey, how much do you owe me in taxes? Oh, we still owe 10%. So we do that, take 9,500, we take 10% of that. How much do we have now? So now, we only have to pay $950 in taxes. Does that make sense? So before, both times, just to be clear, we're still making $10,000 either time. But over here, with no tax deductions, I'm having to pay $1,000 in taxes. I have to give the IRS $1,000. But if I have $500 in tax deductions, I only have to pay taxes on $9,500. I don't have to pay it on $10,000. So at the end of the day, the amount of money that I have to give the government is less with those tax deductions. And so now that you kind of understand how it works, you're probably asking, okay, what are these? How do I get them? You know, where do you get these? Where do you get this money from? So some examples of things you get tax deductions for: things like charity. Some others: work-related expenses. Sometimes, given the situation, large medical bills. And there are plenty others, but just for these purposes, I'm just going to list a few. So first off, for charity. So if I say 1 year I donated $500 to charity, you know, I gave $10 here, $100 here, and it added up to $500 for the year, then I could say, hey, I gave $500 to charity, and most of the time, you'll be able to use that as a tax deduction. Then we have work-related expenses. Depending on what your job is, depending on the year, if I say as a teacher, I went off and spent $100 on school supplies or $200 on things for my job. As long as I keep track of that and I keep the receipts, I can tell the IRS, hey, I spent this much money on it, I'm going to use it as a tax deduction. And so you were allowed to do that. And once again, because tax law changes every year, it's going to change year to year, so you'll have to kind of brush up on what it is for that particular year. So step aside for a second. You guys want to write this down for your own notes, feel free. Then at the bottom, it says tax return form review. Because we're not in person, it's a little more difficult to do that. So we're going to stop it there for the day. And you guys have any questions, shoot me an email, write something in the comment description below, and I'll get back to you as soon as I can. If you guys don't, I'll see you next time.